Assalamu alaikum. Bismillahirrahmanirrahim. Dear student, we are discussing the first test, or you can say first assignment. I'll try my best that within a very short period of time, I should discuss the entire question, even though it's a 50 marks question. But obviously the main objective is to explain each and everything in very easy words rather than consuming too much time. So that's, you can say, your test 1 or assignment 1. It can be anything. Test number 1. Okay. It's a 50 marks question, as we know that. Now, question 1 of ATX is 50 marks. Okay. You should assume that today's date is 1st July 2023. Today's date is given, which is a normal trend of ATX. Respond to the instruction in the email from your manager. We know that normally you will have all the requirements in the email from your manager. Professional marks will be awarded for skill, communication, analysis, evaluation, skepticism, commercial acumen in your answer, 10 marks. Let's attack the question. You should assume that today's date is 1st July 2023. Okay. Your manager has received schedules of information from Ray and Shanira, an email from Ray's niece Kelly in connection with their personal tax affairs. Your manager has received schedules of information from Ray and Shanira, 2 people. Email from Ray's niece, 3 people. In connection with their personal tax affairs. Ray and Shanira have been clients for some time, and Kelly wants to appoint us to replace her existing tax advisor. So obviously the ethical issue will come over here. You're not supposed to directly say yes to Kelly. Obviously you should be investigating why Kelly wants to leave the previous tax advisor, or is the Kelly wants to leave the previous tax advisor, or the previous tax advisor wants Kelly to leave them. So we need to find it out. We need to make sure that Kelly should not hide any information, obviously relating to the taxation, from us. We need to find out, we need to make sure that Kelly should not be involved in any money laundering transactions, because what happens if the client is involved in such activities, and being a tax consultant, you are unable to find it out, then you will be facing the consequences from the HMRC, because you are the tax consultant who is going to submit the tax return and each and everything. Okay. The schedules from Ray and Shinaria, an extract from the email from Kelly, an extract from an email from your manager are set out below. Schedule of information from Ray. I was born in 1964. Wow. Still alive. That's, I would say, it's a really good thing. I'm resident and domicile in the UK. That's nice. Shanaria and I are getting married on 17 September 2023. That's pretty early, I would say, getting married. This is the time to go up rather than getting married, but okay, it's up to them. We cannot say anything, please. Ray. Unincorporated businesses. I was employed part-time until 31st March 2023. Okay. 31st March 2023 falls in the tax year 22-23. The annual salary in respect of my part-time was £15,000. The whole of my income tax liability has always been settled via tax deducted at source. If whole of your liability is deducted at source, then you are not supposed to pay any payment on account, because the entire liability was already deducted at source, which normally happens in case of employment. I began trading on 1st June 2023. Okay, the business is starting on 1st June 2023. I purchased a computer on 3rd June 2023, okay, which is used both in its business and personally. That's very important. If you are buying a computer which is used both in personal as well as in the business, you will get the capital allowance. But dear student, listen and listen carefully. You'll be getting a capital allowance according to the use of that computer in the business. For example, if I assume that computer is used 70% in the business, assuming the value of the computer is, let's assume 1 lakh pound, which never happens, so let's make it 10,000 pound. Then out, if the computer is costing 10,000 pound, then you'll be getting an annual investment allowance of only 7,000 pound. That's, I'm assuming, if there's a 70% business use. Since it is mentioned in the question that computer is being used for both personal and business purposes, then you will be getting a capital allowance, but only according to the business proportion. I'm not registered for the purpose of VAT. If you're not registered for the purpose of VAT, you can register voluntarily if you want. You have advised me that my taxable trading profit are calculated using accrual basis, okay, rather than cash basis. And the budgeted taxable trading profit for the business are 8 months ending 31st January 2024 is 35,000. Year ending January 2025 is 66,000. You have already informed me that my taxable trading profit based on these budgeted profit and my income tax liability in respect of all of my income will be. Dear student, listen and listen carefully. Even though the business is starting on 1st June 2023, and that's a very big hint of going towards basis period, but please read the question carefully. Examiner has already calculated the taxable trading profit according to the tax year, and they have already calculated the income tax liabilities as well. So there is no need to calculate go for the basis period. There's no need to go for the basis period. You can see one more thing. Look at this. First period is 8 months ending and the profit is 35,000. Look at this. Taxable trading profit we are getting here is 46,000. So simply what I really want to say, examiner has already actually performed the basis period calculation. No need to calculate basis period calculation. Another thing, income tax liability is already given to us. No need to recalculate the income tax liability and check is it correct or wrong. Never do that. What tax payments will I be required to make between 1st July 2023 and 31st March 2026? The question being asked is, what tax payments will I be required to make between 1st July 2023 and March 2026? Basically, we need to think for the payment on account. Payment, because he's asking what tax payments will be required to make between 1st July 2023 and 31st March 2026. Okay. Schedule of information for Shanira. I'll come to that. Wait for a minute. Extract from the email, rental income, additional information. Just a minute. Okay. Please carry out the following work. Prepare memorandum for the client files which addresses the following issues in respect of Ray and Shanira. Ray unincorporated business, calculation of the income tax and calculation of income tax and national insurance contribution payments to be made 1st July 2023, March 2026 and the dates on which they will be payable. Ray has told me that he does not intend to withdraw all of the profit of the business. Instead, he will either increase his inventory. I'll come to that. First, this point, calculation of income tax and NIC contribution. So actually, we need to first deal with the calculation of income tax and NIC. Let me tell you one thing. In case of sole trader, you have to pay class 2 NIC and class 4 NIC. Another thing, payment on account is very simple. The first payment on account is on 31st January during the tax year. during the tax year. Second payment on account is on 31st July after the tax year. After the tax year. And the balancing payment. Dear student, the balancing payment is paid on 31st January after the tax year. 31st January after the tax year. So first payment on account is made on 31st January during the tax year. Second payment on account is made on 31st July after the tax year. And third payment is made on, balancing payment is made on 31st January after the tax year. Now let's deal with this, and we have to make a memorandum. Dear student, I'm solving on this one note because my objective is to bring more clarity in my answer. Whatever I'm writing over here, you can easily type that on. If the entire question is on, if the major part of the question answer is relating to the calculation, then you must perform that calculation on Excel. Otherwise, if the major part is theoretical, then you should go for MS Word. Like memorandum, how to make the memorandum, just trying to explain the answer as quickly as possible. Memorandum. Client, we have two main clients, Ray and Shanira. Ray and Shanira. Subject would be, you can say, multiple tax issues. Multiple tax issues. Prepared by, we are the tax senior normally. Prepared by tax senior. Date was mentioned in the question. 1st July 2023, they have mentioned 2 times in the question. We are solving requirement 1 actually, in which I really want to discuss payment of tax and NIC. Ray, unincorporated business. Unincorporated business. Point number 1 is payment of income tax and NIC. Payment of income tax and national insurance contribution. Now let's see the question. What is the data? They have given us a data, obviously. Income tax is paid in payment on account, and class 4 NIC is also paid payment on account by using payment on account. But class 2 NIC is always paid on with the balancing payment. Class 2 NIC is not paid as payment on account. So look at this. Income tax, we need to find out payments between 1st July 2023 and 31st March 2026. That's very important. They're saying 1st July 2023 till 31st March. Basically, if I talk about this, actually 1st July 2023, if I tell you, for example, 31st January 2023, that is not required. 31st July 2023, we do not have any information, because for 31st July 2023, we need to have the uh, income tax liability of 22-23. And since the income tax liability of 22-23, when he was a part-time employee, entire tax was paid at source. Since the entire tax was paid at source, so no payment on account is required on 31st July 2023. That is why no simply no payment on account comes on 31st July 2023. I'm repeating because for making payment on account on 31st July 2023, we need to have the income tax liability of 20 to 23. Since at that time this person was an employee and entire income tax was paid at source, so no payment on account is required on this date. So no payment on account. Then if I say 31st January 2024, the balancing payment. Again, no balancing payment issue will arise because the entire income tax was paid. Entire income tax was actually paid at source. But after that, of course, now listen. So balancing payment is not, there's no balancing payment. Okay, now look at this. Tax year 23-24. Now listen and listen carefully. Again for the tax year 23-24, the tax year 23-24, the first payment on account is on 31st January 2024. But again, we cannot make any payment on 31st January 2024 because for making the first payment on account on 31st January 2023, we need to have the information of the previous year income tax liability, and we do not have any previous year income tax liability information because entire amount was paid at source. So actually we cannot have, we are not having any payment on account on this date, even the second payment on account, which is 31st July 2024. Again, we are not having any payment on account, but definitely the balancing payment will come. We will logically start from the balancing payment, which is 31st January 2025. From here onwards, we will start the balancing payment and everything. From 31st January 2025 we will start. So basically for the tax year 23-24, the balancing payment on 31st January 2025 will arise. So simply you just need to understand few things. If for example your current tax year is 23-24, okay, and the first payment on account actually arises on 31st January during the tax year, which is 2024. But for this payment, I need to have the income tax liability of 22-23, which we don't have it. We need to have the previous year income tax liability. We need to have the previous year class 4 NIC, which is not there. That is why the first payment on account on 31st January 2024 is not possible. The second payment on account 31st July 2024 is again not possible because we do not have any income tax liability of 22-23 because at that time this person was an employee. That is why an entire income tax was paid at source. Or over here, for this, if your current tax year is, let's say, 22-23, for this you need to have then your first payment account is 31st January 2023, and this is not even asked. 31st July 2023 is again not possible because if the current tax year is assuming 20-23, then you need to have a previous year income tax liability. Previous year would be 21-22. Again, at that time, this person was only the employee and the entire income tax was paid at source. So now let's first calculate class 2 and class 4 NIC and the payments. So I would say before this explanation, it would be advisable you should revise once the payment on account area also. Okay, let me calculate class 2 NIC. Class 2 NIC is paid 3.15 per week, and from the date business has started, that is 1st June 2023 till the end of first tax year, there are 10 months. So tax year 23-24, 3.15 into 52 into 10 upon 12. I'm getting 137. Let me repeat, how did I get 10 months? Business started on 1st June 2023. From here I'll go to the end of first tax year. So if you count, these are 10 months. And class 2 NIC is always paid with the balancing figure. It is not paid as payment on account. So this 23-24 137 payable date is 31st January after the tax year. 31st January after the tax year. 2024-25. Now we have the entire tax year. 164 payable date 31st January 2026. Now let me calculate class 4 NIC, because class 4 NIC is paid as payment on account. So let's first calculate class 4 NIC for the tax year 23-24. Class 4 NIC. Taxable profit is 46,000 minus 12,570 into 10.25%, and these NIC rates would be given to you in exam in the tax rate sheets. I'm getting class for NIC 3427. Income tax liability is given to us in the question. For the 23-24, they have given us the income tax liability also. Income tax liability is 6686. Income tax liability 6686. So the total amount is 10,113. Okay. Now if I do the little bit calculation of class 4 NIC for the tax year 24-25. In 24-25 we have a taxable trading profit 66,000, which means 50,270 minus 12570 into 10.25%, 3864. Again, these NIC rates would be given to you in exam, don't worry at all. 66,000 minus 50,270 into 3.25%. I'm getting 511, 4375. Income tax liability they've already given us. Income tax liability is given in the question. Income tax liability is given in the question. Let's see what is the income tax liability. income tax liability is 13,832. 13,832. I'm getting 18,207. Now very easily we can show that these payment on accounts. Income tax and NIC payments. Income tax and NIC payments. Twenty-three, 24. We'll be making the balancing payment. Balancing payment on 31st January 2025. And that balancing payment will be the entire amount, which is 10,113. Now for the tax year 24-25. First payment on account. First payment on account is on 31st January during the tax year, which will be the 50% of the previous relevant amount. 10,113 into 50%. I'm getting 50, you can say 56 with a little bit rounding off. Second payment on account. Second payment on payment. No, that's payment on account. Just a minute. Payment on account. 31st July after the tax year. That will be again 50% of the previous year relevant amount. 5057. Then the balancing payment. Balancing payment is on 31st January 2026. The total amount relevant amount which we computed is 18,207. Already paid 10,113. The balancing payment is 8,000. The balancing payment is coming 8,000. The balancing payment is 8,094. Okay. Now for the next tax year, which will be 2025-26. First payment on account 31st January during the tax year, which will be 50% of the previous year relevant amount. That is 9104. But to be very honest, dear student, I really request every one of you do revise once the payment on account area so that you should have a really good grip on this answer. Still you have any question, you can always ask on WhatsApp group. Let's read other parts of the question. Okay, gifts from Shanira to Ray. I was born in 1967. I'm resident domicile in the UK. Ray and I am getting married. Okay, done. On 1st Feb 2023, I gave Ray a house situated in the country of Helosia. Helosa. We have only ever used this house for our holidays. The house was valued 3,60,000 at the time of this gift. I purchased the house on 1st September 2006 for 2,80,000. Okay, fine. I will make the following further gifts to Ray between now and at the end of the calendar year 2023. So obviously the CGT issue will arise and you will not be getting any PPR because they have ever used that house. Painting. Basically personal private residence relief will not be available because it is written some we have only used ever. So now let's go ahead. I purchased this painting at auction for 15,000 on 1st March 2019. It is a painting which we both love and would never sell. However, I obviously paid too much for its current value is only 7,000. Wow. The painting which is having a current value only 7,000, they paid 15. Shares in Solaris PLC. I will give Ray the whole of my holding of 7,400 ordinary shares in Solaris PLC. The current market value is 9.20. I think Ray has got a lottery, is getting each and everything from Shanira. I acquired these shares on 1st October 2021 when Solaris PLC purchased the whole of the ordinary share capital of Beam PLC. This takeover was a genuine commercial transaction. Actually, initially, she had shares in Beam PLC, and then Beam PLC was acquired by Solaris PLC. This is how he got the shares of Solaris PLC, now which she's planning to give to Ray. At the time of takeover, I owned 3,700 ordinary shares in Beam PLC, which I had purchased on 1st June 2015 for 12,960. In addition to the shares in Solaris, I also received 14,800 in cash from Solaris. Actually, giving this information means you can calculate the base cost for these 7,400 shares. So initially, there were shares in Beam PLC and it was taken over by Solaris PLC, and then they got the 7,400 shares in the cash as well. An ordinary share of Solaris PLC was worth at that time 8.4. Okay, we'll come back to this. Extract from an email from Kelly. Let's see what Kelly says. I was born in 1990. Okay, I have always been domiciled in the country of Folger. Okay, I was resident in the UK from 6 April 2020 until I moved to Folger 1st Feb 2021. Wow, 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 such a long time. However, I have not been happy since I moved to Folger. Consequently, I have decided to return to UK on this date, at which point I will resume UK residency. Okay. Rental income in the country of Folger. I will keep my house in Folger so that I can return it at some future time. In the meantime, from 1st May 2024, I will rent it out. Okay. My understanding of UK tax position in relation to this rental income is as follows. Provided I do not bring the rental income into UK, I will not be subject to UK income tax. So she's thinking about the remittance basis, but actually remittance basis will not be available to her because Kelly is supposed to be remittance basis only available to those individuals. They are just UK resident. They're not domicile. If you are a UK resident as well as domicile, then a rising basis is applicable. In case of Kelly, basically a rising basis is applicable. Why? Because the deemed domicile, she will be treated as a deemed domicile. Because in the last 20 years, in last 20 years, at least she was a UK resident at least for 15 years. So if someone is UK resident for 15 years out of last 20, which is the case in case of Kelly, then it is treated as deemed domicile. If you are a deemed domicile person, then obviously a rising basis is applicable, but if you have paid tax in overseas and you will be paying tax in UK as well, then double tax relief will be available, but she will not be getting a remittance basis. A rising basis is only applicable due to deemed domicile status. If I do bring that income into UK, I will then have to pay UK tax upon it. Please explain whether or not your understanding is not correct because you are a deemed domicile person. Since you are a deemed domicile person, that is why you have to pay tax on a rising basis. If you have paid tax in overseas as well, then you'll be getting a double tax relief. I've also been contacted by the tax advisor who told me about some sophisticated tax planning I can do to reduce my UK tax liability, which I would like to use going forwards. Additional information in relation to Shanira. Shanira is a higher rate taxpayer. The gift of the house to Ray on 1st Feb 2023 was Shanira's first lifetime gift that falls in the tax year 22-23. You should use the current market value of the painting and shares in Solaris PLC in order to calculate the chargeable gain arising on these gifts. Okay. Neither gift holdover relief nor business asset disposal relief will be available in respect of the proposed gift of the shares in Solaris. Okay. Shanara has not made any other chargeable disposal. Oh, fine. There's a capital gain. If no other chargeable disposal is made, it means annual exemption 12,300 is available. There's a capital gain tax in the country of Helosia, but no inheritance tax. If the capital gain tax is in the country of Helosia, then double tax relief will be available in UK. There's no double tax treaty. Even the double tax treaty is not there. Still, UK gives you the double tax relief unilaterally. Taxation in Folger. Income tax charge at 26% on all income in Folger. There's no capital gain, no HT. There's no double tax treaty. Okay, now we have done this part. Ray has told me that he does not intend to withdraw all of the profit of the business. Instead, he will either increase his inventory levels or acquire additional equipment, and has asked how this will affect the taxable income. Now, I'm just explaining this part, dear student. Listen and listen carefully, and you just need to listen to me, and then you can write all this, what I'm explaining, in your own wordings, so we can save the time. One, you have to give the heading of effect on taxable income of increasing inventory level or acquiring additional equipment. First, you need to put the heading. I'm just putting the heading, and then I'll explaining you in my own wordings. Effect on taxable income of increasing inventory. Increasing inventory or acquiring additional equipment. Now listen and listen carefully. If you're increasing the inventory, number one, you are following the accrual basis accounting. Now listen, you need to think for the P&L, profit and loss, or you can say associate statement of comprehensive income. Obviously, if you are increasing the inventory, one, your purchases will increase. Obviously, the increase in purchases, you will be thinking that if the purchases, they increase, then COGS increases. Now listen, when your purchases will increase, then obviously your inventory level will increase. So logically, the increase in purchases effect which reduces the profit will be cancel out the increase in the closing inventory. Because when your closing inventory increases, your profit increases. So simply, if you're increasing your inventory, it will have no effect on your taxable income. Why? Increase in purchases effect will be cancelled out due to increase in inventory. So there will be no effect on taxable profit. But let me tell you one thing. If instead of accrual basis accounting, if you are following the cash basis accounting, then whatever inventory you have purchased, the entire inventory payment will be treated as an expense. Then your taxable profit will reduce. But right now it is mentioned in the question they are not following cash basis accounting, they're following accrual basis accounting. So you just need to write two things, that increase in inventory level means purchases will increase, but the impact of purchases will increase will be cancelled out due to increase in inventory level. So it will have no effect on taxable profit. But instead of accrual basis, if Ray were following the cash basis accounting, then entire purchases of the inventory would have been treated as an expense and your taxable profit would have reduced, but which is not the case here because Ray is following the accrual basis accounting. Acquiring the additional equipment, yes, if Ray is acquiring the additional equipment, Ray will be getting the capital allowance on that, and due to that capital allowance, 100% in fact capital allowance will be available, that is annual investment allowance will be available, and that will definitely reduce the taxable income, and reduction in the taxable income means tax will be safe. So you just need to write this. I'm not writing all this, I've explained you. Please write in your own wordings because otherwise it will take a really big amount of time. Third, raise incurring input tax, conceding registering voluntarily for VAT. Set out the information we need in order to advise him on whether or not voluntary registration is possible or financially beneficial and explain why the information is needed. This is very important, and an explanation of whether or not Ray can recover input tax in respect of the computer purchase on 3rd June 2023 if registered for VAT. 5 marks. Now listen. That's your second requirement of the question on VAT. Actually, voluntary registration. Now listen. Number one, before voluntary registration, number one, you need to know a voluntary registration is only voluntary registration will not be possible if Ray is only dealing in exempt supplies. It means in order to get voluntary registration, some of the supplies must be taxable. Another thing, Ray needs to consider that in case of voluntary registration, what happens? The taxable supplies of Ray they will become expensive. If Ray's customers are registered with the VAT authority, then there's no problem at all. Obviously, whatever increase in the taxable supply comes, customer will be able to recover. But if Ray's customers are not registered with the VAT authorities and Ray gets his business registered with the VAT authorities, which makes the taxable supplies expensive, then obviously there's a possibility that you may start losing the customers. Now another thing, getting the input tax in respect of the computer, yes. The income tax which you have paid, sorry, the input tax which you have paid on the goods 4 years prior to the registration. Input tax which you have paid on the goods 4 years prior to the registration, you can recover that. You can recover that input tax provided that those goods are still in the business, but only input will be recovered according to the proportion of the business, because it is mentioned in the question that computer is used for both personal and business purposes. So whatever is the proportion of the business used in the computer, input VAT paid on that proportion which is used in the business is recoverable. So what are the points which you need to discuss for VAT area? One, voluntary registration is not possible if Ray is dealing only in exempt supplies. Ray must be making some of the taxable supplies in order to go for voluntary registration. Another thing, Ray needs to consider that what about Ray's customers? Are they registered with the VAT authorities? Then increase in the price of the taxable supplies will create no problem at all. But if the Ray's customers, they are not registered with the VAT authorities and Ray gets his business registered with the VAT authorities, then there are chances of losing the customer. Now let's go back. Dear student, whatever I've explained, please write in your own wordings in order to save the time I'm doing this. But I'm with great honesty I'm explaining each and everything. Gift from Shanira today. A calculation of capital gain tax payable in respect of the gift of house in Hilosia based on the currently available information together with any further information required to finalize the liability and due date of payment. Due date of payment, okay. Capital gain, capital gain, capital gain. Part B. Capital gain area is very easy. Gifts from Shanira, Ture. Capital gain tax. Actually, the house is having a market value of 360 and when it was bought, it had a value of 280. So simply the chargeable gain, 360 minus 280. No gift was made before this. It means annual exempt amount is available, which is 12,300. So let me use the calculator. 80,000 minus 12,300. The taxable gain is 67,700. Taxable gain. And since it is a residential property, so CGT payable in UK rate is 28% because he's a higher rate taxpayer also. Shanira is a higher rate taxpayer. It is written in the question. CGT payable 67,700 into 28%. 18,956. And the due date is 31st January after the tax year. So it is 31st January. Gift was paid on Feb 2023. So due date of this 18,956 is 31st January 2024. For double taxation, actually, we just need to find out one information. What is the tax rate in Hilosia? If there is no tax rate, if in Hilosia, if there is no capital gain tax, then entire 18,956 will be paid. If there is any capital gain tax in Hilosia, then double tax relief will be available, which is lower of tax paid in overseas and tax paid in UK. Now let's see what they're saying. Any other information? An explanation with the supporting calculation when further gifts should be made to Ray. The objective here is to maximize Ray's capital gain tax base cost without creating capital gain tax liability for Shanira. In order to achieve this objective, you should consider dividing the proposed gift of the shares into two gifts to be given on different days. Now listen carefully. Actually, when you are giving a gift, one person is giving gift to another person, especially before the marriage. If gift is given before the marriage, if gift is given before the marriage, okay, just a minute. If the capital gain is arising on the gift, if the capital gain is arising on the gift, okay, and those two people they are getting married, then to be very honest, the gift which will result in capital gain should be given after the marriage, because after marriage gift will be treated at no gain no loss basis. But in case of gift, the capital loss will arise, then such gift should be given before the marriage so that capital loss can be materialized and tax would be safe. So it's a normal tax planning. If the capital gain is coming, then gift should be given after the marriage. If the capital loss is coming, then gift should be given before the marriage. The maximum possible inheritance tax liability which would arise in respect of the proposed gifts to Ray of the painting and the shares. If Shanira were to follow our advice in respect of their timing, actually the maximum gift will only arises when donor dies within 3 years of making the gift. If the donor dies within 3 years of making the gift, then obviously no taper relief would be available. Then definitely maximum IHT will be paid at the time of death. Together with the circumstances which the liability would occur. Okay, so let's deal with that. What are the proposed gifts? Mhm. We have done with this. I will make the following further gift to Ray between now and end of the painting. I purchased this painting at auction 15,000. So painting definitely should be given before the wedding ceremony, so that the loss should be utilized. Painting, painting, painting. Now listen. Just let me explain. Proposed gifts. Painting will result in capital loss because the market value is 7,000. It was purchased for 15. Now listen and listen carefully. If the painting is given as gift before the wedding, then there's a capital loss of 8,000. There's a capital loss of 8,000. And that capital loss can be used against the chargeable gain in order to save the tax. But logically, base cost for the recipient person will be 7,000. So capital loss will be realized, and that capital loss will be used against the chargeable gain to save the income tax. But the base cost will not be 15,000. Base cost is the market value at the time of gift, which will be 7,000. If we really want to increase the base cost, then gift should be given after the wedding ceremony. But the tax advice is, if the gift is resulting in a capital loss, then it should be given before, before wedding. Now let's talk about shares in Solaris. Shares in Solaris PLC. Let us check. Now you need to understand little bit calculation. Is here. First we need to actually find out the base cost of 7,400 ordinary shares. Initially, there were 3,700 shares in Beam PLC. Cost was 12,960. Against these 3,700 shares, 7,400 shares were taken in Solaris PLC. At that time, one share had a market value of 8.4 and cash was also received. if I show you a little bit calculation of allocation of this old shares base cost, old shares 3,700 and cost 12,960. Let's say market value. At the time of takeover, 7,400 into 8.4. This is the market value of the shares. 7,000. 7,400 into 8.4. 62160. And they also received the cash of 14,800. Allocation of cost. The total cost is 12,960. Let's see. It is 76960. If you calculate a percentage, 62160 divided by 76960, it is coming 80.77%. So 100 minus 80.77, that is 19.23%. So 12,960 into 80.77, I'm getting 14,600, 14,000, oh sorry, I'm getting 10,000. I'm getting 10,468. 10,468. So 10,468 minus 12,960. So actually the base cost relating to 7,400 share is 10,468. So that is a little bit working. So they are giving all the shares of in Solaris PLC as gift. So proceeds at market value 7,400 into 9.2. 9.2 is the market value at the time of gift. I'm getting 68,080 less the cost, which you can find out from working 10,468. I'm getting a chargeable gain 57,612. If I calculate chargeable gain per share, chargeable gain per share 57,612 divided by 7,400, I'm getting 7.79. Actually, now we just want to give few number of shares which will result in a capital gain which is equal to, which must be equal to the capital loss of 8,000 plus the annual exempt amount of 12,300. And the rest, okay, let's start the recording part 2 of either we will merge this part with the first one or take it as a part 2 or continuation of the first part. Actually, the number of shares which should be given before wedding ceremony as gift, the capital gain on those number of shares actually should be equal to 20,300. In this way, one, we will be able to utilize the capital loss. Second, the annual exemption will not be wasted. So let's see. The capital gain per share is 7.79. So in order to realize a chargeable gain of 20,300, all you need is just simply, in order to, you can say, utilize or realize The chargeable gain, realize a chargeable gain. Realize a chargeable gain of 20,300. Shanira should give, how many shares has give? 20,300 divided by the capital gain per share, which is 7.79. If I divide 20,300 by 7.79, I'm getting 2605. So logically 2605 shares must be given before wedding and remaining shares should be given after wedding. So 2605 shares. Shanira should give 2605 shares before wedding and remaining shares 7,400 minus 2605, that gives us 4795. Remaining shares 4795 after wedding. After wedding. Okay, now let's go back to the question again. Now look at this point. We have done this and this. The last point, the maximum possible inheritance tax which could arise in respect of the proposed gift of ray of painting number 1 and the shares number 2. Painting and shares. Okay. Logically, the maximum IHT will only arise. The maximum IHT will only arise when the donor dies within 3 years of making the gift. In that case, what happens in case basically during the life it is PAT and no tax is paid on the PAT. But PAT becomes chargeable if the donor dies within 7 years of making the gift. But in case of maximum IHT liability, donor must die within 3 years of making the gift. In that case, on death tax, no taper relief would be available and the IHT will be maximum. So in case of maximum IHT, dear student, let me explain what you have to write. But I really request each one of you that please do write whatever I'm explaining in my own words. So why I'm not writing, because to save your time, otherwise the video becomes very long, and that's my experience. Students, they don't watch such a long video. So that is why, to keep the video length short, I'm doing this. Inheritance tax. Simply you just need to write 2 to 3 lines. The maximum IHT liability in respect of this gift of painting and shares will arise if the donor dies within 3 years of making the gift. In that case, simply no taper relief would be available on death tax. So now simply let's calculate the death tax. Painting. The market value of the painting is 7,000, which we have seen in the question. And how many shares during the life we have decided to give as gift? We just computed 2605 and the market value is 9.2. You can see that. Shares in Solaris. Shares in Solaris. 2605 into 9.2. Dear student, you need to use your calculator. I'm getting 23,966. If I add, I'll get a transfer of value. Transfer of value. I'm getting 30,966. Let us deduct the annual exempt amount. Annual exempt amount for the current tax year is 23-24. Only 3,000 is available. The question is why we are not having annual exempt amount of 22-23 is not available. Why? Because 22-23 annual exemption is already used against the house. You can see the house was given as gift in the tax year 22-23. So that is why the previous tax year annual exemption is not available. The house in Hilosia, which had a value of 3,60,000, that was the first gift which was given. So since the annual exemption is already being used against the house, that is why 22-23 annual exemption is not available. So we are getting 27,966. On this 27,966, we have to pay the death tax. But before the death tax, let's see the availability of the nil rate band. Nil rate band. 3,25,000, but less gross chargeable transfer 7 years prior to gift. So we do have the gross chargeable transfer. Basically, the first gift was given the house in Hilosia. Obviously, during the life it was paid. On death tax, it becomes chargeable. But the house, gift of the house first becomes chargeable. So it means we had a value of 3,60,000 less annual exempt amount of the current year 22-23 and 21-22. 3,000 and obviously 3,000. So logically I'm getting 354, which means nil rate band is already being used. Let me repeat. Basically we are calculating death tax. Obviously when one individual gives gifts to another individual during the life, it is PAT and no tax is paid on PAT. So right now, dear student, be careful. We are calculating death tax. We are calculating death tax. So the taxable amount is actually 27,966. In case of maximum IHT, which is only possible when the donor dies within 3 years of making the gift. So the IHT rate is 40%. IHT at the rate 40%. If we apply 40% on 27,966, we are getting 11,186. We're getting 11,186. Now let's go back to the question, what they are saying. With regard to our new client, Kelly. Kelly, rental income in the country of Folger. Please draft a response we can include in the email to Kelly, which provides the explanation requested in her email, 4 marks. Basically, Kelly is thinking that since she is not bringing her rental income from Folger to UK, that is why she is not supposed to pay any income tax. So her thinking is not correct, because she is not only resident, she is also domicile. But obviously she is treated as a deemed domicile because she was UK resident at least 15 years out of last 20 years, which makes Kelly a UK domicile person. So since you are resident as well as domicile of UK, so only arising basis is applicable. Basically remittance basis is not applicable. And on rental income, whatever it is, you have to pay income tax in UK. But obviously the tax paid in Folger, you will be getting a double tax relief, and double tax relief is lower of tax paid in overseas and tax paid in UK. In UK, let's say the Cali is paying 40%, and in overseas the tax rate is 26%, so which means that effectively she will be paying only 14% additional tax. If we see Kelly, if Kelly is a higher rate taxpayer, let's see. Okay. Mm, Kelly. Kelly. Okay, I was born in 1990. However, I have not been happy. This. Please, whether or not my understand, I have also been contacted by tax advisors. Told me that sophisticated tax planning. I was born in 1990. I have always been domiciled in the country of Folger. I was resident in the UK from this date to this. However, I have not been happy since I moved to Folger. Consequently, I have decided to return to UK on this date. I will keep my house in Folger so that I can return in the future sometimes. I just want to see, is there any tax status of her is given? So actually, they're not saying anything. So simply you can simply write that remittance basis is not applicable, arising basis is applicable, but you will be getting a double tax relief. For example, if you are paying 40% tax in UK and the tax paid in overseas is 26%, which means effectively, Kelly, you will be paying just 14% additional tax. Even though the double tax treaty does not exist, still you will be getting a double tax relief. So this is what you need to discuss in this point. Which point? This one. The last one is becoming a Kelly's tax advisor, 5 marks. Obviously, please set out some notes explaining any procedure we should follow before accepting Kelly as a client. As we know that the 5 marks, you can say ethical question will be a part of the one part of 5 marks on ethics will be a part of question 1. This time, it's a very simple question. We just need to explain. Please set out some notes explaining any procedure. So I'm just quickly explaining this part D to you. Actually, number one, before becoming tax advisor of Kelly, we need to have the proper identity of Kelly. And for that, obviously, we need to know what is her address, passport, something like that. Another thing, obviously, before becoming the tax advisor of Kelly, we need to find out why Kelly wants to leave the previous tax advisor. Is the Kelly who wants to leave the tax advisor, or the tax advisor wants to leave her? Simply, it's not sound good to write like that. Simply just write why Kelly wants to leave the previous tax advisor. We need to find out that. Another thing is obviously the integrity. Integrity means we have to be very honest. We need to make sure that Kelly should not be hiding any information from us, because if Kelly is hiding any information from us, then it becomes problematic for our firm to become her tax advisor. So Kelly has to be honest with us. Another thing is professional competency. Definitely, we need to make sure that we have all the skills which are required to provide sophisticated tax planning to Kelly, which obviously Kelly is expecting from us. And another thing is we as tax advisor, we need to, you can say, carry out the review to satisfy ourselves that Kelly is not involved in any money laundering activities. Another thing is we need to make sure that sophisticated tax planning does not mean aggressive tax avoidance. There's a difference between uh, tax, for example, if she's expecting a sophisticated tax planning, it means she would be expecting aggressive tax avoidance, and tax avoidance is actually legal. But we will not be going towards tax evasion, because tax evasion is obviously illegal. If Kelly is expecting from us that we will be going towards tax evasion, we will not do that. So dear student, all these things you need to write. So what I did in this question, dear student, I the part which required calculation, I did that calculation for you, obviously. Second, where the theoretical part, I have explained the each and every theoretical part in my own wordings, so you can write in your own words. This is our first test, but to be very honest, uh, I'm just going to give you the second test also, because to be very honest, now I'll be having two types of my students. One, they will take my all the tests serious, and they will take it seriously, and they will be obviously attempting the test properly, and they will be rewarded when the time comes, obviously in exams. But those students, they're not obviously fully committed. If they are not attempting the test, this attitude will not help you to get past this paper. So you are, if you are obviously you're sitting in ATX, such a big paper, so you have to be serious. You will not, you are not required to be serious just to pass the paper. You are required to be serious because it's a question of your future. And sometimes, dear students, we don't prosper, we don't get success, and the reason is nobody else. Some more of, I would say most of the time, the reason we are ourselves. So actually, nobody stops you from getting success, to become successful, except you. So you need to make sure your routine should be such that you should not be losing any day. Every day must be productive. You should be studying in a productive manner. Every day you need to learn something. So please be serious. Think for your future, and definitely think for your family. There will be people, they will be depending on you. Everybody, inshallah, will be having people, they are and they will be praying for you, and they were praying in the past as well. So if you have, mashallah, such people, they are praying for you. So in return, I think it is your duty that you must work hard and become ACC affiliate as soon as possible. So thank you very much watching this video, attempting the test. Have a nice life. Assalamu alaikum.